Yeah, so I mean, if you just look at the case for global equities, I think it's still pretty compelling. Obviously, a lot of people will focus on the valuations piece, particularly on a standalone basis relative to history. So equity valuations don't look cheap on that basis, but they still look relatively cheap against bonds. And if you look at the macro drivers, we're clearly looking for growth to continue and remain above trend in the US next year, for instance. As the reopening phase still continues, consumers still try and wind down some of that set precautionary savings built up during the pandemic, and we see rebuilding of inventories. Add in that and the fact that inflation is likely to come down modestly, and monetary policy is likely to be very stimulatory still. We need we'd need probably 2% rate hikes to get to constraining monetary policy. So we're a long way from that. The tailwinds for equities still seem to be pretty strong in our mind.
Steve, it's Hadley out in Abu Dhabi. I mean, walk us through what this means in your view for the emerging market equities.
Yeah, so clearly, I mean, you're seeing a dichotomy very clearly. So global equities hitting new highs, but that's all led by developed markets, whether it's the US, which you've already mentioned, are hitting new highs. Europe's getting very close again now. Whereas if you look at emerging market equities and markets in Asia as well, they're pretty much off high, significantly off highs, and not really looking like they're going north anytime soon. The critical factor for here is, well, I suppose there's two critical factors for us, and they're probably interrelated. One is the vaccination rate and reopening. So we've seen in China obviously some fairly modest number of cases, but that's leading to concerns around the growth outlook. We really need to get to an environment where emerging market governments and Asian governments are comfortable with living with COVID. Vaccination rates suggest that in many countries we should be there, but obviously there's still a bit of uncertainty. And then the second factor would be the outlook for the dollar itself, right? So at the moment, the dollar is still looking pretty strong. It's not really strengthening dramatically, but if we were to see the dollar peak out and that fall, I think that would then take a lot of pressure off inflation in the region and allow central banks to ease policies, or at least back off from tightening, and the growth differentials to widen again back in favor of emerging markets and Asia. Those are the two sort of factors that we're looking at. We don't seem to be there just yet.
Steve, before I let you go, just to focus in on the UK equity situation, I mean, beyond Europe, beyond the United States, obviously they're facing headwinds slightly differently and potentially a resurge in COVID cases.
Yeah, I mean, obviously the question is to what extent they're going to confront that with clamping down on activity. We're not convinced they're going to do too much. I think our biggest concern actually from the UK perspective is more in terms of, do they overreact to inflation? Obviously there's supply bottlenecks, globally, but they're being extenuated in the UK from the Brexit as well. So not a preferred market of ours from an equity market perspective. If anything, it's our least favored market when we look around the world today because of those policy risks.